Welcome back to the NEOS Monthly Income Podcast. I'm Tom Lydon, and each month we're joined by the founders of NEOS, Garrett Paolella and Troy Cates, who help us focus on what's most important, monthly income in a tax-efficient way. Gentlemen, great seeing you. I hope you've had a good summer.
Great seeing you, Tom.
Great to see you as well. Summer was great, but back at it.
I don't think you guys rested much, and I know that especially because we've got kind of some celebrating to do regarding the 3-year anniversary. So Garrett, talk about that. I mean, you've got to be proud.
Yeah, we're very excited. I mean, I think the whole team here is proud. I think as most people that know us, just always core focused on clients, on delivering, returns and the expected outcome of our products. And, so to get to the 3-year mark on kind of like our first core inaugural suite that came out, obviously we've grown a lot since then, but just really excited. I mean, I think investors have certainly adopted the products, but for us, as we always do, trying to count our stripes on performance and keeping our heads down and focused on deliverance.
Troy, run through those 3 ETFs that you started 3 years ago and really what they mean as far as being able to be core positions.
Yeah, so we launched in August of 22. We brought out SPYI, our S&P 500 high income ETF, BNDI, which is our aggregate bond ETF, and CSHI, which is our 1 to 3 month T-bill ETF. And we were looking at this really from an asset allocation standpoint, saying what are the building blocks of someone who wants to build a portfolio, and especially someone looking for income. And so we picked these 3 strategies to bring out. We wanted the core S&P 500. That's where a lot of people go to invest when they're thinking about starting their own portfolios and looking at building up a portfolio and with different equities and ETFs. And so we started with the S&P 500. Then we wanted a fixed income portfolio. We really looked at the aggregate core bond portfolio and adding income on top of that. And then, of course, there's always a part of your portfolio where you want to be more conservative, more in cash. And so we built this 1 to 3 month T-bill ETF with the added income on top of it. And I think that was really important for us to start with those 3 and then build from there.
So Garrett, when you look at advisors, investors, institutions, when they create the core portfolios, like you said, a great example, the S&P 500, bond market, the ag, money market funds or treasuries, and you can decide what your allocation might be. But then when you do it the NEOS way, each of these ETFs or each of these tools add on that monthly income in a tax efficient way. It's kind of the best of all worlds.
Yeah, I mean, our focus here, as I think some people know, is as you mentioned, the tax efficient monthly income. So how do you take like the S&P 500 for SPYI, and instead of having a dividend yield of around, call it 1.25, 1.4, you could be more in that 10 to 12%. Right range, but you're taking core exposure to the S&P 500. And so that's really the premises across all of our products here, but even these 3 core that we launched a few years ago is how do I get more income above what my 1 to 3 month treasury bill could yield for me? How do I get additional tax efficient income on my core bond portfolio or my equity portfolio? And we just love the ability to let investors espouse their views, right? They might have a view on short-term performance. They might have a view of what their estate planning goals, their risk tolerances could be, their income needs. And so when we started with the first core 3, and even as expanded to the 12 we have today, it's around allowing investors to choose what it is that they're looking for to achieve their retirement goals, their estate planning goals. And so we just love that optionality, kind of pun intended, to let investors build a portfolio for what they're looking to, achieve, in returns and income needs.
Troy, a lot's going on in the market. Lots gone on in the markets in the last 3 years, both in the income and the equity side. But as you look at the markets today, what especially are the main things that the NEOS products can do to help investors today? Because again, we've seen some volatility in all markets. There's uncertainty and that type of thing. What have these types of products brought?
That's a good question. I think when you look back over the 3 years when we launched these products, we were in 2022, and and it feels like forever ago, but that was a really tough time in the markets in general. So we launched these products. We were like, this is a tough time to bring out 3 brand new ETFs from a brand new ETF issuer. And we knew we really wanted to bring these products out. And as we got them out, it really opened a lot of conversations for us early on about CSHI in particular, and talking about, because a lot of people were shoveling money towards cash products and ultra short duration products at the end of 22. So it brought about a lot of conversations. And as we kept adding, kept, the performance where it was for all 3 products, And then going into 23, we saw this market rally, 23, 24. But yeah, thinking about what's gone on the past, year to date, we've had a lot of volatility around tariff announcements. We've had a lot of volatility from headline risk. Looking into the fall, are we going to see rate cuts from the Federal Reserve? So really, there's a lot going on. And what these products do is they could give you a portfolio with that underlying reference asset, for example, SPYI with the S&P 500, and give you a lower vol portfolio, but provide income off of the volatility of the option market around that S&P 500. So for us, we really look at it as how can we capture a lot of the upside of some of these underlying indexes like the S&P 500 while still providing a tax efficient income off of that volatility. So when you go through times like April with the tariffs or other times when volatility is heightened in the market selling off, these become, in our view, a very attractive product to take in income and also be able to participate in those markets.
Garrett, Troy's talking about volatility like it's a friend, and I've never seen an investment or an asset manager or an ETF issuer embrace volatility the way you guys do. Well, how does volatility work in your favor?
Yeah, I was going to just jump into with what Troy said. I think the two things I see with investors as we talk about this volatility is one, it shouldn't be a scary part of your portfolio. We harness volatility, right, as an opportunity, as an income source, right? And so what could have been or used to be a negative, right, really should be a positive for your portfolio. And I think the other thing with that in mind is what do we do here in NEOS in the products, right? It helps also investors stay invested. When the markets are going down or when volatility is heightened, our products are meant to still be long-term holds. That's helping you dampen the volatility across your broader part of your portfolio and really stay invested. Because I think one thing investors tend to do when it gets to be really ugly and concerning, right, is they punch out at the lows. And these help advisors, they help direct investors stay invested in their portfolios. And I think one thing the way we look at that generally is as volatility picks up, you're able to generate more income in the options market when volatility is heightened. As volatility is lower, that comes in a little bit. But the core level of volatility that's generally in the market is a very sufficient volatility level to generate income from the options. So you have a great base level to always be managing off of. But at times of other troubles, when people are getting more concerned about their portfolio, those are ways and opportunities for us at NEOS really to take advantage of that and seek to deliver more income, for a portfolio or to position the portfolios to really take advantage of those heightened volatility environments.
Garrett, you had another point. One was volatility. What was the other?
The other was the staying invested, right?
Okay.
So I was saying these types of products help people stay invested, because you're not worried about those major spats of volatility. They're kind of focusing on consistency of distributions. And as that volatility ebbs and flows, right, it helps the investor not have to worry about buying and selling like as if it was a growth equity investment where you're going to, try to buy low and sell high. These just help you weather and not have to worry about your account statements month over month when, times are getting, tough.
And you've seen that with flows into the products as well. In fact, if you look at the flows during times of volatility, actually buying seems to have kept up.
Absolutely. Seeing the opportunity to buy, when the market sells off and get in a good average price and, and then have, the bounce back effect of that and your distribution go higher. We've certainly seen that.
Troy, talk a little bit about rates. Now, finally, we've been waiting. Finally, it looks like it's imminent. What does that mean to especially the fixed income products, and why might in a lower rate environment the dividend stream from especially BNDI and CSHI look even that much more attractive?
Well, that's a good question. A lot of people have been asking it since we've heard from Jerome Powell at Jackson Hole on what may be happening this month in September and possibly in December. It looks like rate cuts are coming. So for products like CSHI and BNDI, when you think about it, all of our fixed income products, you'll notice the difference in the name. It's enhanced. We're trying to enhance the income of whatever you're getting in that core portfolio. And if rates start to get cut, think about CSHI, if we get a quarter point or half rate cut and suddenly those 1 to 3 month T-bills are now yielding 3.5. You're still getting that extra 1 to 1.5 over time on top of that. So that becomes more meaningful.
I know you guys just pay attention to managing the portfolios, educating advisors and clients, but there's a lot of competition out there. You look at the synthetic income space and the growth in the ETF arena, there are more and more ETF issuers that are coming to market with ETFs that kind of are in that category. What makes NEOS different?
Yeah, so I think a couple things. Our team, right? So Troy and I have spent more than 18 years working together straight. We've pioneered the option-based ETF category, bringing some of the very first products out to market, over 12 years ago. The rest of our team here is solely focused on these types of products with us. And so we're not an ETF issuer that goes to jump on the next hot dot. So you have options managers that have managed money for some of the largest pensions, endowments, hedge funds. We've created some of the largest option-based ETFs out. So it's really that area of expertise and that focus. We focus on doing one thing extremely well and having our whole entire team focus exclusively on that. In addition, I think we look at the investment landscape from the lens of the actual investor. And so if I'm going to invest in a product that NEOS brings out, pick SPYI just because we've been talking about it, right? What is the expected risk and the expected outcome I would get on a net after tax basis as an investor? We're huge allocators into our own products. And that's because we're really looking at it from the eyes as an investor, not as a product issuer of like, is this just going to gain attention from investors? How are we actually going to deliver the performance and try to do that on as much of a consistent basis as possible? So I think we're very institutional, focused. We have a strict investment process that we follow within all of our products. And we have a team that's exclusively focused on this. And I would say after all that, it's customer service. Everything is about working with our clients, working with our investors. They're our partners. That's how our business operates. It's how our team, puts food on the table for their families. And for us, we're so passionate about the products in the space. We want to make sure that everyone feels comfortable that engages with us about what the products do, how they operate, where they fit in a portfolio, so that there isn't an unknown, part of the investment. If you wake up one day and tariff 2.0 ends up happening, you know what you're going to expect with us.
Right, right, for sure. Troy, dig a little deeper, if you would, as far as generating the income, the disciplines behind it, and the type of options that you buy, because not all options are created equal, right?
Yeah, exactly. When you think about our entire suite, we're now up to 12 ETFs and growing. We have a few more in registration and some more that we want to put in registration to bring out. Wherever we can, we're trying to trade index options, as you kind of alluded to. Those get that 1256 contract treatment where you're getting 60% long term, 40% short term. And it just goes into the process of how we build these ETFs. Everything we do at NEOS is researched here, designed here, and then traded here. So we have a very experienced trading team. Garrett had mentioned the team in general. I mean, that team, 3 people out there with all 20 plus years experience doing trading different asset classes in this market. And for us, as we build these products, we want to make sure each one of them is as tax efficient as possible in our view. And that part of that is using those index options. And if you think about how we build out our suite, everything we do here is rules based and systematic. Garrett and I talk about that all the time, but we don't want to have that risk on, a discretionary piece of the portfolio being decided by a trader or by one of us. We want to make sure everything we're doing is rules based, systematic, and can be repeated by the team whenever needed. So it's really important for us to have that process in place and follow those rules. And as we continue to grow out the suite of ETFs, that process moves over to the next one as we grow it.
Right. And Garrett, Troy just said 12 products now. You've taken that core group and expanded more on the equity-based income side, on the bond income side and cash, and then the alts area. Touch on some of the innovations that you've had over the last year or so.
Yeah, I think we've always followed that mantra, right, of being a solutions provider. So for investors to allocate where their estate plans, deem them, or the places they're interested, or their short-term views on things. Over this just recent year, we've added in the alt space IYRI, which is our real estate, high income, so getting exposure to U.S. REITs. We've offered a gold product, so IAUI. In about the last 2 months, we launched that. So again, gold, an asset class that historically has a net income, now has the ability to do that off of the volatility level of gold. We've expanded our hedged, equity income space. So for clients looking to generate tax efficient income, but not taking a full equity exposure. So I think as we think about that and look out to the future, it's really continuing to produce products that investors are looking for in their portfolio, whether those have been traditional income oriented allocations or indices or allocations that haven't had income, such as gold, but would play very favorably to leverage that volatility level of that underlying, as an income stream for the years and the months, that are not in a very bullish trend. So a lot of more optionality, right, for investors across, as you had mentioned, Tom, right, fixed income, alternatives, adding to the equity exposure. And so you could build a core portfolio, with the NEOS products to enhance that tax efficient income.
You two guys are really humble, but you've got a lot to brag about. First, a couple things. ETF.com awards. You won for 2024 Best New Active ETF in QQQI, which is the sister of SPY, representing the NASDAQ 100. You were a finalist for Issuer of the Year as well. Also, we've got the Wealth Management Awards coming up shortly. You are nominated for 3 different awards there. People are taking note and they're voting with their feet because I see you continue to move up the ETF league table, which is kind of the MLB equivalent of who are the winners and who are the losers, and you guys just keep moving up. I know you don't let that go to your head. You just continue to work harder, but it's got to feel good.
Listen, I would say from my perspective, it's great, and that's a team accolade, right? For us, it's all about having a strong team, having a strong firm that all has that same dedicated focus on clients. When the awards come, I guess that's other people, right, taking notice that we're very passionate about the space and we're very focused on delivering for our clients, and so it's great to feel that, but it's certainly an afterthought to a strong team, and work ethic, really focusing on our investors.
All right, so that's great, Garrett. But Troy, you guys kind of have this social media fan base. I see the number of podcasts you're on through social media. I mean, there are a lot of people that are singing your praises. That's got to feel good too.
I think it feels good because people are recognizing how passionate we are about this space. They want to hear us talk about it because, when we get a new product out, we're not just throwing a ton of products out there to see what kind of sticks. We're really coming at it as really thoughtful, bringing out 1 or 2 products at a time and continuing to grow the space and really for NEOS continue to slice up that asset allocation pie. So it's exciting when people are excited about these products, excited about a new launch with one of our new products coming out. And we saw that with our most recent launch when we launched the gold product IAUI over the summer, how quickly people were talking about it, how quickly assets came in. So for us, yes, that is exciting. But going on a lot of podcasts or doing a lot of interviews, it's all to talk about the business and really talk about the team and the great effort that the team's putting behind it.
Okay, before we close, what can we expect from NEOS in the next 3 years? Give us a little peek behind the curtain, just the things that you can talk about, Garrett.
Yeah, wow, 3 years is a long time in this industry. But how about on the next 3 months? To start is so we're excited. We have an international high income product that's filed and in registration. So giving investors exposure to non US equities with that high income overlay. Shortly thereafter, we'll have our Ethereum high income. So we've heard from a lot of existing clients that they have exposure to Ethereum, but they love to harness the volatility, which is exponentially even higher than Bitcoin. And so we have that product coming, and several more in research and behind that. But our kind of concept is, again, fill out that allocation bucket as investors see the need, and just be that solutions provider, but harness the expertise on the option based space that we can deliver.
I know you guys, and I know all your best ideas aren't used up yet. You've got to be excited about the future.
We're very excited about it. The team keeps growing. We're almost at 30 people here in the firm now. And as we grow and not only, as you said, move up the league tables, it's really growing the firm, growing the different products we have out there. So really excited about what the next 3 months, 6 months, and next couple of years look like for NEOS.
Well, guys, congratulations. Glad you had a good summer, and thanks for all you do personally as a shareholder. I really, really have enjoyed it, and my wife thanks you as well. Anyway, we'll catch up with you guys soon.
Thanks, Tom. Appreciate it.